China have developed a really efficient LLM, large language model, which is effectively competing with the likes of OpenAI, Anthropic, all of the US AIs.
What sort of effect does this have in the short term, on a lot of the share prices for these big AI companies?
Well, it's going to get smashed and we're seeing that. Nvidia's down.
Hello and welcome to The Market Edge, your weekly dose of market analysis, and this week it's going to be a very busy show.
Yep, China has released its answer to ChatGPT.
Their LLM is called Deepseek, and it's having a huge effect on the Nvidia share price and could have a huge effect on Nvidia's future profitability.
But why is this such a game changer? We're going to delve into that amidst other topics as well.
We'll delve into this story and we'll look at some of the key earnings happening this earnings season. We'll look at Netflix, Meta, Tesla, Microsoft, and a few others.
Do us a favor, like and subscribe if you're watching on YouTube. And if you're listening on a podcast platform, hit that follow button so you can get our insights every 2 weeks direct to your inboxes.
Right, let's take a look at some of David and I's winners and losers from the last few weeks. But let's start off, Dave, with the meme of the week. Now, the meme of the week that we've got here is a picture of Sam Altman in some descript sports car. And it says, Sam spent more on this than Deepseek did to train the model that killed OpenAI.
Just to understand what's going on, China have developed a really efficient LLM, large language model, which is effectively competing with the likes of OpenAI, Anthropic, all of the US AIs, because it's effectively lowered the computing cost and it's open source. I have various doubts about this, but it cost $5 million to train.
Now, $5 million sounds a lot of money to some people.
Yeah,
this is peanuts.
Yes, but I think overnight the news of this has been very, very PR contrived, and I've got my doubts. It's coming from China. We know what the CCP would be like. They're very much involved, even if they say they're not.
Yeah.
It's come from a Chinese billionaire. All Chinese billionaires are CCP captured because they have to be. And it's described as his pet project. Now, if this isn't...
That doesn't sound like it's going to get banned by Donald Trump at all.
Well, if this isn't CCP propaganda, then I don't know what is. I think it's very much a cultural sort of ideological thing where they're basically saying, oh, us communists have built something cheaper than the capitalists. And that's basically where it comes down to. But, it's showing that Sam Altman has indeed spent a hell of a lot on this supercar, which I think is about $10 million, something like that. I can't remember which one it is.
He's not short of a few quid, though, so I think it'd be all right.
Well, the irony is that OpenAI was a non-profit up until a month or two ago. And that's what Elon Musk keeps getting at him over. He's changed it to a profit now.
Yeah. And
then he goes and buys a multi-million-dollar car. So, yeah, it's quite funny. But, yeah, that's basically the meme.
I don't know what your social media is like, but
insane.
Everything on my social media is trying to thrust AI down my throat a lot of the time, you know. And, of course, this is going to be a huge story because, OpenAI is the big name, if you like, in this area. And, what sort of effect does this have on... We're in earnings season. We're going to talk a little bit more about that later. But what sort of effect does this have in the short term, on a lot of the share prices for these big AI companies?
Well, it's going to get smashed and we're seeing that. Nvidia's down 12% today. This is Monday that we're recording this on. Down 12% today, and it's largely because they're looking at it from, okay, well, if their computing power required now is less and they don't need as many Nvidia chips. Yeah. So, less orders.
This is just a key supply and demand thing,
Exactly. Right? That's all it is. So if we go on to the tweet of the week here, it leads into the fact that Nvidia is lower as well.
Yeah.
Volatility is a welcome creator of opportunity. This is Tim, who I work with. Hearing that it exists to transfer money from the weak to the strong, but that's just speculation. He's being a bit sarcastic here because that's exactly what volatility is.
Yeah.
If you're looking at a company like Nvidia that's down 12% and you're selling it when it's down 12%, I would say you're definitely a weak hand, considering we're so early still on the AI revolution and Nvidia is such a key player. So the way that I see it, and you mentioned the word short term just a second ago, was, okay, the computing power might actually be cheaper when you factor in Deepseek. But the big differentiator here is that if it's cheaper, it just means now that the available increase almost, if you look at something like Moore's law, where, you know, processing speeds almost like, I think it's either double or they square or something like that. And you focus that in it. It basically means that the available opportunity now has just increased hugely based on Nvidia's prior technology, if that makes sense. So really it's opened up a hell of a lot more for the AI space to go. And I actually think this might be why there's been so much chat about AGI, which is the next phase of AI effectively, where they can actually live and breathe independent of everything. Which is scary. But there's been a couple of mentions of this.
It's a seamless move from, you know, Nvidia shares to robots taking over the world. I like
Pretty much, that's where we're going. I can't wait. I can't stand most people anyway, so I wouldn't mind a robot that actually likes me.
Let's not assume that the robot's going to like you.
Well, yeah, exactly. That's true as well.
I think one of the key things that we look at here is that obviously this is coming from China, right? Now, we have a new president in the United States, Donald Trump. Now, obviously you've got that TikTok story, which is still going on. You know, Donald Trump, TikTok, that's been extended for now, the ban on TikTok. So TikTok's still there in the US. Likelihood is it remains in the US. But we're in this situation where anything that comes from China like this, Donald Trump's going to block a lot of technology that's coming in unless it's profitable for the United States. So something like this Deepseek discussion point here, how much that can integrate into US firms is yet to be seen, right? Because we just don't know what Donald Trump's policy on any of this sort of information is going to be. I'm pretty sure Donald Trump doesn't know what the policy is either.
Well, the thing is it's open source. So he can't really do much about it.
He can try,
but
since when did anything being open source ever stop Donald Trump trying to do something to
he can try and do it, but the fact is that it is open source, and everything's been replicated already, so you can host this locally. It doesn't have to be on the internet, so someone's probably already got the LLM, and they're able to do whatever the hell they want with it. That's been the threat, and that's why all these companies today are down quite heavily, because they've literally just open sourced it. It's a massive PR move by China, and I don't yet understand the motive outside of it just being a PR move. I have seen a video recording though where someone asks Deepseek who the leader is, and it says Xi Jinping, but then it actually deletes its answer and says we don't have the capabilities to answer this. So, you know, it seems like whenever I see a massive bout of euphoria in something, and a big overreaction, it always makes me doubt things, because really statistics should trend at the mean. So if something's going like that and everyone's going crazy, it tends to mean that there's a capability of a bigger collapse, if you like.
We were looking at the picks from last week, and the only reason I'm so happy about this is because mine's done well and David's hasn't, which is a complete reverse of what happened a couple of weeks ago.
I think, look, I'm a big fan of the company, and I'm long them personally. Over a different time frame though. Not over 2 weeks. It's down by about $2. I think bid 51 and a bit. Down at 49 at the moment. Buffett's a big owner of them.
I mean, look, Buffett's a big owner of them. Like we say, these are stock picks, right? So these are a lot of stock picks. 2 weeks is a long time in the trading world, but, you know, a lot of stock picks aren't held for necessarily 2 weeks.
Yeah, exactly.
The fact that Buffett is... look, I think what's interesting here is that Buffett hasn't sold it in the last 2 weeks.
Well, no, exactly. Well, look, I think if you're looking at these things over a 2 week time frame, especially on such a big regime change like Trump coming into power, you know, we're looking at the Fed meeting at the end of the month as well. There's still a lot of thematic stuff to feed through for the idea. But your one, Gamesworkshop, now this was an absolute killer, and it was a great pick. You literally timed the bottom on it.
For those of you watching on YouTube, there is a nice spike up, and the bottom of that spike is where I picked it. I think I'm fine. But like we spoke about this a couple of weeks ago. Look at, I mean, the moving averages are lovely. You know, the chart looks nice. You know, it's a nice looking chart. We also said that this is not necessarily a rocket science pick because, you know, we've spoken a couple of times about this whole 52-week high trading strategy where if it's going up, if stock's been going up for 52 weeks, the likelihood is they keep going up.
Yeah.
You know, so that's one side of this. The other side is, and again, as we spoke about last week, is that the margin here, these are plastic models which sell for massive money.
Huge.
But the key thing is it's almost a cult following.
It's a cult of lonely men.
This cult following is, you know, buy into cults because people are loyal to cults.
Yeah.
And that's what.
Yeah.
That's where I am in
Absolutely.
this.
There's a couple of different mental models you can choose for trading and investing. One of my favorite is pick American companies that are down massive. American companies that have existed for a very, very long time that are down 30% on the year.
Yeah.
Intel, fantastic idea behind that. Boeing as well.
Yeah.
If you look at Boeing, we've had all of these disasters, yet everyone is still using Boeing planes. That tells you a lot.
Yeah. Good point, actually. Good point. Now, you should either never fly again or buy Boeing shares.
There you go.
Now, Netflix is actually our chart of the month because it jumped up to all-time highs. Now, I think this is key because what we've seen from Netflix, and okay, their numbers have been, they've become a bit of a barometer for earnings season because they're right at the start of earnings season, not first, but they're right at the start, and they tend to report, and then that tends to be, you know, how earnings season goes. They're doing well. The key thing here was in Q4 last year, they had 19 million new subscribers. 19 million, massive number. But what I want to touch on here is the movement, not just with Netflix, but the movement into live sports and streaming services moving into live sports, because that is where streaming services kill traditional broadcasters. Because live sport, look at the UK model here, look at Sky Sports with Premier League football. They pay billions to have Premier League football. Yet you've got these companies who are absolutely massive. Now with Netflix, over Q4, they had the Tyson Jake Paul fight. Now you can think of that what you will, but still, made loads of money. They had NFL on Christmas Day, which not just they had NFL on Christmas Day, they had a Beyonce Super Bowl style halftime show there, which cost millions, but also doesn't bring in just the NFL fans, brings in anyone who wants to watch Beyonce, which is half the population of the world, it seems. But then the other thing that they've moved into, they've bought the rights to WWE. Now, talking about cults, the Gamesworkshop, WWE is another one of those, which is a bit of a cult following, you know, huge cult following. Not just the fact that they have that, I'm aware I'm talking a lot here, but not just the fact that WWE is there, but WWE is now owned by this new group, TKO, and TKO own UFC. Now, if there is this chance that UFC, which we know is massive as well, gets into Netflix, this is a great opportunity for Netflix, and especially moving with live sports.
Definitely. I think, you know, the whole backdrop of TV, movies, media has changed massively. There's been a real shift, and I think it's very interesting from Netflix's perspective because they've been gradually increasing pricing quite a bit over the last couple of years. You know, and
they have again done that for this after this earnings announcement.
And you were talking about barometers for earnings. Well, I take Netflix really as being a barometer for the US consumer. Yeah. Because if they're able to raise pricing to that extent, while also having relatively US centric, you know, live sports, for example, you know, the Tyson Jake Paul fight, it's very US centric. Yeah. NFL on Christmas Day, as you say, you know, all of these kind of things, while getting that subscriber growth, it's shown that the US consumer is seriously strong. And that can obviously be backed up by US growth numbers as well. So when you're looking at these massive tech companies that are very consumer led, Netflix is actually a fantastic way and gauge of looking at what maybe a quarter's growth looks like, in my view. So it's not just really a single stock bet, it's more of a macro bet as well if you're long Netflix, in my opinion.
Just in this week that we're recording, we've got Meta coming out. It all touches into AI and Meta. We've got Nvidia next week. We've got Apple this week. We've got Microsoft this week, and all of those companies. You know, traditional companies like Meta and Microsoft. But the focus for Meta and Microsoft is AI, right? So it's AI which is really, really going there. And what's going to be interesting that we see within these earnings is the spend, the projections that we get from them for future revenues. All of those future revenues are based on what the future of tech, social media is, which is all AI.
Yeah, I would say one of the big issues though is this DeepSeek thing that's come out.
Yeah.
Because what they're going to have to do is scramble to revise perhaps what their projections are looking like. Because the thing that I can see is perhaps some of the order book actually gets wiped a little bit, because there's going to be companies out there that are saying, okay, well, if we perhaps go into a slowdown, we're going to choose the free option, of DeepSeek over perhaps, Claude, OpenAI, etc., etc. And so the way that I might be looking at this is, okay, well, if they're going to do that, what is the extent to which they won't need Nvidia chips, for instance?
Yeah.
So, however, that then gives the potential for an upside trade idea, because then what you're looking at is, okay, well, they revise their hurdle lower. Eventually, the market is going to regain, and then that hurdle can be beaten.
Yeah, exactly.
Especially with now the future potential of AI being even higher if the efficiency has increased.
Yeah.
So that's the way that my head looks at these trades. Okay, it's down now, but what does the future surprise premium look like, perhaps?
Yeah. And these Mag 7 stocks, Magnificent 7 stocks are they really dictate everything, don't they? In the S&P. I mean, when we look at it, they are the headline grabbers, and of course there are so many other companies that we've picked on. Some of our picks, we looked at Walmart before, which was a key pick, but we've got Tesla, which is one of our picks reporting this week as well. But from those Mag 7 stocks are really the full S&P 500 focus, aren't they?
Well, I actually like to refer to them as blue chip sovereign bonds.
Nice.
Because you can even see in this environment, when rates are coming down, no one actually really wants to buy bonds.
Yeah.
They still want to buy stocks.
Yeah.
Okay. And so the way that I'm looking at that is they're considering the likes of Apple, the likes of Amazon, or more specifically Apple, actually. We can use them as an example because Apple is such a big holder of US Treasuries. So they hold US Treasuries as part of their reserves, as part of their balance sheet.
Yeah.
And so people are looking at them as like, well, you guys can borrow money at 0% while your stock's going up. You're effectively better than a US Treasury.
Yeah.
So why would I hold US Treasuries over that?
Yeah,
and that's why
absolutely.
I think the price of government bonds hasn't really gone up.
And interestingly, obviously, we've got a Fed rate decision, and what's interesting around that is that just last week, Donald Trump came out and said, "I will be insisting that interest rates fall." Now, of course, the Fed is an independent party, is an independent body from the US government. But how much do you reckon? How much potential is there that Jerome Powell actually listens?
Jerome Powell is probably, I don't know if he's as wealthy as Trump, but he's worth a good $250 million. He's not a man to be swayed by losing his job or anything like that. Trump can't sack him either.
No, exactly.
The Fed's
imagine the market reaction.
Whew. The Fed governor is Fed governor. Is that right?
No.
Chairman.
Yeah.
The Fed's chairman
Look at
is...
us, our brains are completely emptied at that point. If you go back and pause the video, you'll see the point where panic comes directly over our faces.
And so I think in terms of that, Powell is very, very principled, in my view. He will do what's right. And the market is currently pricing 0 cuts even for January to March. I think it's priced at maybe like 25% the last time I read it, which was last week for a March cut. And so the thing that I'm looking at is I don't think the market's even pressing on rate cuts as well.
Yeah.
Which is good. It's good for the stock market, in my view, because it means that the most efficient companies are going to be the ones that are driving it. It's not when you're getting to lower rates and then all the companies with loads of debt now start rising up. You're actually getting the companies that are making things, are making actual money, and are productive. You're not getting zombie companies basically getting bid.
Yeah, for sure. So our other pick of the week is Cameco.
Yeah.
So what do you think there? Typical stock, nice movements in it?
Well, yeah, they're one of the biggest miners in the world of uranium. And so if we're taking this DeepSeek whole saga into question, the way that I'm looking at it is, okay, well, one of the beneficiaries of this to get to the same efficiency just in a different way is to now really boost nuclear production to make energy costs cheaper, so that the powering of AI is even more efficient than what China can provide. That's basically the way that I'm thinking of it. But don't get me wrong, I think there's a lot of question marks over the whole story of DeepSeek. I want to see it develop. There are going to be so many red flags that pop up in my view, that, you know, this could be a completely dud idea in the end because none of it really matters. But instantly that would be something that I'd be taking a look at when the market kind of settles down a little bit.
Yeah, so we've got two ends of the spectrum in our picks, Nvidia and Cameco, mining, AI. You know, pretty diverse. Don't say that we're not anything but diverse.
Exactly.
Our picks for the year are Tesla, Walmart and Rolls-Royce. This week we're looking at Nvidia and Cameco, but what are your picks? You know, do you think we're right? Are your picks better than ours? And most importantly, is there anything you want us to talk about? Jot it down below, let us know, and we'll pick it up and we'll cover it in the next show.